On Press Perspective today, the South Korean won remains vulnerable against major currencies, while the country's stock market maintains its bull run. Do stay with us. Hello and welcome to the program. It's Tuesday, January 20th here in Seoul. I'm Min Sunhee. Today we talk about the South Korean stock market rally as well as its weakening won and the Trump administration's latest tariff on certain chips. For more on this, I have Celio Fioretti with French daily Croix here in the studio. Celio, welcome back.
Glad to be here.
I also have Professor Kim Jinill at Korea University joining our talk virtually. Professor Kim, it's a pleasure to have you with us.
Thanks for having me.
Right, we shall start here in the studio. Celio, let's start with this week's action on the local bourse following its stellar performance last week.
Yeah, exactly. Let's start with the numbers. After last week's strong rally, South Korea stock market extended its gain this week with the benchmark Kospi closing at a fresh all-time high of just over 4,900 points, up about 1.3% on the day. Intraday, it briefly touched nearly 4,917, underlining the momentum still driving the market. Year to date, the index is now up more than 16%. And the rally, however, is being powered by a very narrow group of stocks. Semiconductor giants, Samsung Electronics and SK Hynix, for example. They continue to rise, with Samsung hitting the symbolic 150,000 won level for the first time in its history. And autos also stood up with Hyundai Motors surged more than 16%, overtaking LG Energy Solution, for example. But foreign investors remain the main drivers of this trend, buying more than 550 billion wons worth of shares, even as retail and institutional investors sold that much. That concentration is precisely what's worrying a bit the experts. Over the past month, Samsung and SK Hynix alone accounted for nearly 2/3 of the increase of Kospi market capitalization, making the market increasingly sensible to the global shift in the economy, especially when we talk about semiconductors prices and all the tariff that comes into place these days. And that vulnerability was underscored by fresh warning from Washington about possible tariff chip makers facing what they want to expand their production in the US if they don't want to face tariffs hikes. And at the same time, domestically focused stocks and smaller companies continue to lag in investment, creating what policymakers describe as a K-shaped market, in Korean uniqueness once again. And despite record high, many Korean investors are still shifting money to the US and not investing in the domestic market. So we'll see if that trend will follow, but it will highly depend on international market, international policies also.
Right, indeed. And Professor Kim, as Celio just mentioned, quite a number of analysts have voiced concern of the reality that the stock market rallies in recent times are being led largely by chips and cars. Do you share these concerns, Professor Kim?
Yes, as Celio just described, this K-shaped economy or K-shaped market, that's characterize the Korean market very well at the moment. And the two chip companies, of course, are at the forefront, the Hyundai car companies. I don't know whether it's car company or other company, it's kind of a broader based company right now, but these three companies provide more than 2/3 of the gains in the last couple of weeks for sure. And that itself is not a problem, but whenever we face any crisis, or even though not crisis, any headwinds, as we may face soon from Washington, the Korean economy as a whole could get into trouble. And that's why many people or many economists are warning that we should not put all the eggs in one basket, basically. But right now, the three companies are doing really well, the two semiconductor companies and the Hyundai Motor. And that's the one Korea is kind of relying on right now And that's the K-shaped market or K-shaped economy at the moment. The K for two meanings. First, for Korea, K, and K in the uppercase K when it's shaping into two different directions. And maybe only three companies are at the upper part of the letter K, and other companies are in the bottom part of the letter K. And that could create a problem if headwinds blew to these three big companies.
Right, and before we touch upon that particular headwind then, Celio, the South Korean currency against this backdrop remains vulnerable against major currencies, even in spite of a rare vote of confidence, if you will, by U.S. Treasury Secretary Scott Bessent. Could you tell us a bit more about that?
Indeed, the South Korean won remain under pressure from the foreign exchange market, and the currency is still trading near 1,400 won to the dollar, close to its weakest level since the global financial crisis in 2009. What makes this episode notable is the intervention inward of the U.S. Treasury Secretary Scott Bessent, who rarely comments on individual currencies, but he openly said that the recent depreciation of the won is excessive and not consistent with South Korea's economic fundamentals, stressing that an excessive volatility in the currency market is undesirable. And those remarks briefly lifted the won by about 1%, but the effect remained quite short-lived. The broader context explain why, while the dollar has softened against many major currencies, several Asian currencies, including the won and the Japanese yen, have continued to weaken over the months. For Korea, pressure has intensified since the start of the year, driven by global risk aversion, concerns over U.S. trade and investment demands, and expectation that the Bank of Korea will keep its interest rate on hold rather than tightening the policy. And authorities have already tried to stabilize the won through the market intervention and currency hedging by public funds. But the trend has reversed. Analysts warn that a verbal support from the White House, from Washington, can only go so far. If investor remains uneasy about global trade friction that we see these days and domestic political uncertainty, fundamentals alone might not be enough to bend the curve the other way. And so, in short, the message from the U.S. Helps at the margin, but the one vulnerability is deeper, is structural, and depending on external pressure, it's unlikely that the trend will change in the coming weeks.
Right. Professor Kim, the International Monetary Fund has warned that South Korea's dollar asset exposure far exceeds its foreign exchange market size by over 20 times. Could you explain this warning for us and its implications for the local currency?
So that was reported in last year's, I think it's October Global Financial Stability Report, which is basically reviewing the state of the world from the financial stability perspective. And they emphasize that some countries' dollar exposure is too much. So it's basically, it could be a good sign or bad sign for Korea. It's a good sign for Korea because Korea now is rich enough to own foreign assets more than before. But it could be a risk because if exchange rates become volatile, the value of these assets could also become volatile as well. And that's why IMF is warning South Korea and many other countries like Taiwan as well, and that their dollar exposure is too much. When they say too much, it's relative to how much dollar liquidity they have. And Korea is certainly in that range. So for the IMF, whenever there's a big shock around the world, this exposure to the dollar is a big risk. But for Korea, it could be another story because Korea has an incentive to accumulate more dollar assets in case of the future need. So it goes kind of both ways. So IMF is warning about that. So we should be monitoring about the movement of the exchange rates and also the movement of the world capital markets very carefully so that this risk does not materialize to the Korean economy in the near future.
Professor Kim, with regard to the South Korean currency, I understand this may be the million-dollar question, but what are your suggestions to steady the South Korean won?
So it's basically a view perspective on whether the current level is appropriate or not. So many people in Korea they are thinking of, or they are thinking about the good old days of lower exchange rates, but that, I think, period is gone. As you are showing here, won is near its 17-year low. For the last 17 years, since 2009, I believe, Korea has been going through the swing of exchange rates. And I cannot tell what the exact rate is, but for the government, it's their strategy that unless exchange rates move too much to the upper level or too much in the south, they want to maintain the exchange in the band. And that, of course, is helping the financial markets because they can make some money out of it, but that's their business. So as far as won is stabilized within a certain bounds without hitting a major crisis, and that's the band we should get accustomed to, not only for the policymakers, but also for the country as a whole. So that way, this weak won, or relative to a few years ago, right, is not comfortable to some people, but we have to face it, and we have to live, or we have to learn how to live with this level exchange rates when they stabilize around the levels as they are right now. And that way, whenever Korean government intervene, as Celio mentioned a minute ago, that was around the Christmas last year, and that intervention could be effective. And that's the way we can understand the U.S. Treasury Secretary Scott Bessent's comment as well. And as Celio mentioned, I think he said something like, it can go so far. Yeah, and that's the way we should view the weak won in this new juncture.
All right, I suppose that's the new reality then. Along with concerns over the weaker Korean won, Celio, last Wednesday, I believe, US President Donald Trump announced a new 25% tariff on some high-end computing chips entering the American market. And then the following day, he offered tariff relief to Taiwan in return for a $250 billion chip investment. Could you tell us a bit more about that?
Exactly. This sequence of announcement really shows the transactional logic of the U.S. economic policy under President Trump, especially in strategic sectors like the semiconductors. As you said last Wednesday, the White House unveiled a new 25% tariff on certain high-end computing chips, framing it as a national security measure aimed at reshoring some critical technologies back in the U.S. And the move immediately raised alarm in Asia, and especially in South Korea and in Taiwan, which sit at the center of the global semiconductor supply chain. Just one day later, as you mentioned, however, Washington shifted gears. The Trump administration struck a deal with Taipei, offering a significant tariff relief in exchange for massive investment in the U.S. And under the agreement, Taiwanese chip and technology companies are expected to invest at least $250 billion to expand semiconductor manufacturing capacity on U.S. soil, backed by credit guarantees from the Taiwanese government. In return, the so-called reciprocal tariff on Taiwan are capped at 15%, down from 20%, with additional exemption on pharmaceutical, aircraft components, and selected raw materials. The message is clear: build in America and you'll be exempted from tariff, and stay offshore and you'll have strong tariff hitting you sharply, in case some up to 100%, as Trump announced. And Taiwan flagship chip maker TSMC had already signaled room for further expansion into near its Arizona facilities in the U.S., building on $40 billion investment, supplying firms like Apple or NVIDIA. And more broadly, this deal illustrates how tariffs are being used nowadays by Trump. It's not just protecting the economy, but it's really a leverage to force other economies to abide by what Trump's wants. And now the question is, between Taiwan and Korea, who will get a better deal? Who will get the edge to seduce the American market and to keep working with companies like Apple, Nvidia, Microsoft. And the competition is high now between South Korea and Taiwan.
Right, and staying with that, Professor Kim, Trade Minister Yohan Gu delayed his return to Seoul from Washington, D.C. following Mr. Trump's new chip tariff. And upon his return to Seoul, claimed that the new tariff will have limited impact on South Korean exporters. Keeping in mind Taiwan's latest deal with the U.S., Professor Kim, what are your thoughts?
When I was told that he delayed his return, it reminds me of another incident like a few months ago when the Korean finance minister, who is also deputy prime minister, canceled his trip to Washington a few weeks ago, right? I think he was even in the Incheon airport when his trip was canceled. At least Minister Yo was not at the New York airport, at least. So that shows how urgent, the matter is. And then he talked to 24 hours more about what exactly is behind this new announcement, or the Trump announcement. And then the way, I think you are showing it on TV right now, the way he is talking after his return, it's comforting that he is dealing with the U.S. and then in a satisfactory way. And of course, it's all transactional. As Celio mentioned, it's based on the negotiation with President Trump. And that competition is ongoing, and it all depends on how Taiwan and South Korea deals with these trade negotiations. And a lot is on the stake, of course, for the two countries, especially for Korea, because the two semiconductor companies is having a big portion of the Korean economy, especially in the stock market. And in that way, we should be still vigilant in watching what will be done in the near future. And that's, fortunately or unfortunately, the new state of the world after January of last year.
Right. Celia, also staying in the U.S. then, the Justice Department that has reportedly opened an investigation into Federal Reserve Chairman Jerome Powell, apparently sparking much backlash. Could you give us some context?
Yeah, this investigation into the Federal Reserve Chair, Jerome Powell, is generating intense backlash because many observers see it as a direct challenge to one of the core pillars of U.S. economic governance, the independence of the central bank. Formally, the Justice Department is examining the cost overrun tied to renovation at the Federal Reserve's Washington headquarters, as well as allegation that Jerome Powell misled the Congress during its testimony. But critics argue that the legal rationale there is quite thin, especially that far larger cost overruns elsewhere have gone unnoticed by the government. According to multiple analysis, including reporting by the Wall Street Journal, the broader context matters more than the charges themselves. Since returning to the office, President Trump has systematically moved to bring independent federal institutions under tighter control, political control by the White House, removing officials deemed insufficiently loyal or weakening legal and procedural safeguard. In that light, Powell probe is widely interpreted as a warning shot, not only to Jerome Powell, but who is set to step down in May, by the way, but to whoever succeeded him in the chair. The message is clear: monetary policy decisions that run counter to the presidential will may carry personal and legal consequences. It's really a way for Trump to show who's in charge. It's a demonstration of power to make sure that everybody follow his economic policy, his economic vision. And that raised serious concern in Washington and also in Wall Street. The Federal Reserve credibility rests on its ability to be independent and to set interest rates free from any political pressure. If that independence erodes, then the market fear a greater volatility, weaker inflation control, and a loss of confidence in the U.S. institutions. So in short, it's less about the renovation budget that the Trump administration shows up front. It's more about the balance of power between the White House and the central bank.
Right, and perhaps with that in mind, Professor Kim, global central bank leaders, including BOK Governor Lee Chang-yong, have spoken of solidarity with Jerome Powell in an unprecedented show of support. What do you suppose is the significance of this gesture?
The gesture or this signing off by, I think, 10 central bankers and 2 senior officials from BIS they kind of wrote a letter saying that central bank independence is important. Actually, when you're showing this video footage of both Powell and Trump in construction head, that's the construction site, and the chit-chat between the two at that time, I think became a personal matter. That's what I am worrying about. And I worked in that building in the U.S. Central Bank for about 10 years myself, so I could go on and on. But for the central bank, both in Korea and in the U.S. and many other countries, the independence is important because if the administration or the president controls the central bank, then they have an incentive for the right reason because they would like to get support in their election. So that's why most of the countries, through their legislation, is giving power of monetary policy to independent central banks. And that has been in danger in many countries, like, as you heard from Turkey and in other countries. And US was kind of a lone star in that league, but starting with the Trump 2.0, their central bank independence is in danger. And it all depends on who will get appointed to the helm of the US Fed and how he or she will lead the US central banking in the near future. That certainly determines the independence of central bank of the US. Also, it will influence the financial market around the world. And as we discussed, Korean financial markets and exchange rate, that depends upon that new Fed chair as well.
Right, which we'll probably find out this coming spring, as Celio was saying earlier on. All right, Professor Kim, thank you very much for your invaluable insights.
Thank you.
And Celio here in the studio, thank you very much for your time and thoughts. Right, on that note, we end this edition of Press Perspective. Thank you for watching. Be sure to join us again same time tomorrow.